Friday, May 3rd. I write a weekly letter that goes alongside these videos, and got return mail just about an hour ago from a friend who mentioned my rant, and I didn't really mean to rant. The week is interesting. It's the fifth straight week in which long-term interest rates have not moved, which is a little odd, but hardly bad news. But I had to come up with something to say, and anybody who does what I do is a public policy junkie. And after this week with the hearings in Congress, it's hard to clear the mind and stick just with finance. So I did just happen to mention that there's something in William Barr's face and demeanor that made me think of Jabba the Hutt. I don't mean an ad hominem attack on the man, but it might be the sense that inside his head was the thought that he'd like to reach down for a senator and simply gobble him up. Barr referred to Robert Mueller, Marine Corps captain in Vietnam, Purple Heart, Bronze Star, as having been snippy. Here's the first and the last time for everything, and I suspect that may be the first and only time that anybody referred to Robert Mueller as snippy. Also on the scene this week, the horde of Democratic progressive candidates for president, which is now something like 20. Financial markets used to care about things like deficits, and there aren't any Republicans talking about the deficits, but the Democrats have gone one better, and every progressive candidate for president has a multi-trillion-dollar program for new spending without any revenue. Mr. O'Rourke wants $5 trillion for climate. I've forgotten all the things that Elizabeth Warren wants to spend money on, but anyhow. So I went from those public policy issues to the Fed. And the Fed met this week, and the aftermath of the meeting, the whole thing boiled down to one word: transient. Not someone wrapped in cardboard asleep outside the Fed's door, but we have an unusual development in inflation. In the last 90 days, it's fallen like a rock. The most recent data is March. We'll have to wait a few weeks to get April data, but core inflation in the United States fell January, February, March, and in March was just about zero. The Fed's target for inflation is 2%. So in the press conference after the Fed's meeting this week, Chair Powell said that he thought that the drop in inflation was transient. The Fed has had that 2% target now for about 20 years. In the last 10 years, it has met that target about a year and a half. It's never been over it, but it's gotten inflation that high. Back in 2012 and last year, that was it. And during all of those 10 years, the Fed's remarks about inflation that was too low was that it was transient. If so, it's a transient who's moved into your living room and is staying. So the Fed is trying to figure out, what to do about it, and inflation that's too low, and they're not doing very well. They're still stuck on the relationship between the unemployment rate and future inflation, which drives people in financial markets absolutely nuts. To cling to a theory that transparently has failed. What got us in trouble last fall was the Fed's belief that, we need to get the inflation rate up, and to do that, we need to let the unemployment rate stay down. But if the unemployment rate is this far down, now it's 3.6%, that means that we're going to get too much inflation, so we should raise interest rates to make sure that that doesn't happen. Last fall, that got us 5.25% mortgages in a dying economy. And what's missing, and I have no rant intention at all, I'm a Fed fan, and they're trying hard, but the Fed, the astounding thing at the Fed is their inability to ask themselves, why has inflation underperformed? Their focus is entirely on using old measures and old thinking to try to get the rate of inflation to rise, but they won't come to grips with just curiosity. And I mean, I can understand if you're the all-powerful Federal Reserve, you'd rather not walk to a microphone and say that you don't know. But if your business is in some large part to maintain confidence among the people and among financial markets, if you don't know, say so. Or, alternately, don't say anything. Powell this week could have said, we're in an extended pause, we have a balanced policy, we're not leaning towards an increase or a cut, and sit down. But to engage with transient, exactly the same word in the same situation as in the last 10 years, left many of us ranting. Have a nice spring weekend.